Ajay, good morning. Thank you for joining us. Ajay, let me construct three scenarios and then you tell me how markets could react to each of these scenarios. Scenario number one, which is RBI obliges the majority with a 25 bips rate cut. Scenario number two, RBI surprises everyone with a 50 bips rate cut. And scenario number three, we don't get a 25 or a 50 bip rate cut. In fact, more than a surprise, RBI disappoints today.
I think the most likely scenario is the first one, and the market in our view has already discounted that. We are expecting the Reserve Bank to cut repo rates by 25 basis points, and it might keep the CRR unchanged. I think the commentary from the RBI yesterday is a clear pointer that they still remain concerned about two issues. One is the runaway increase in the current account deficit, which market is expecting to be around 6% level for the quarter ending December, on the back of 5.4% for the quarter ending September. This is a cause for great concern within the within the RBI circles. And second is not just the control of fiscal deficit, which the finance minister has given an ironclad commitment to confine it to 5.3% of GDP, but the quality of that fiscal deficit, how you achieve that 5.3%, is also important. In his roadshows abroad, the FM has categorically given an assurance to international investors that the fiscal deficit would come down by 60 basis points every year from next financial year onwards over the next 3 years. However, how do you achieve it is also of importance. If you are going to achieve it through large amounts of disinvestment proceeds or one-off items like sale of spectrum, then I think it raises a question about sustainability of control of fiscal deficit. What is important is you must control subsidies, and at the same time you need to increase capital expenditure. This year what we would be seeing is that there will be cuts in both planned expenditure as well as marginal control in subsidies, which we need to reverse. We need to ensure that the phased rationalization of fuel prices, we have seen a very marginal increase of 50 paisa last month. We need to see that this sustains over the next 8 to 10 months in such a manner that the diesel prices come in line with the international prices, and there is absolutely no movement on controlling subsidies on LPG as well as on kerosene, which Kelkar committee had clearly spelled out a roadmap over 2 years how to ensure that LPG subsidies are brought to zero by end of FY15, and a third of kerosene subsidy remains, but the rest is again phased out over 2 years. So these issues are what are concerning RBI, and the pace and extent of rate cuts from RBI will clearly be determined based on the signals that it receives from the finance ministry about controlling subsidies.
Ajay, how would you assess Tata Motors? Irrespective of the kind of management commentary we've got from the management of Tata Motors, that stock is outperforming. Do you think in the near term every decline is a good time for long-term investors to accumulate Tata Motors?
I think on the auto side, in Tata Motors we are recommending an accumulate with a target price of around 335 over in the medium term. But our clear preference in the auto sector remains Maruti Suzuki India Limited. The company has posted robust performance, and we are expecting the stock to do quite well from the current levels. We are expecting in Maruti's case an earnings growth of around 60% next financial year, and with strong ROEs. I think that is the stock that we would advise investors to get into in the auto space.
Ajay, what are your thoughts on Sterlite Industries and Idea? They both are due to declare numbers today.
In case of Sterlite Industries, we are expecting a top line growth of around 6.9%. We are expecting a top line of 10,957 crores for the current quarter. On the EBITDA level, we are expecting the EBITDA to decline by 7% on a quarter-on-quarter basis to 1.7 billion rupees. On the bottom line, we are expecting a 4.6% YOY increase in Sterlite to around 1,254 crores.
Ajay, the Axis Bank QIP has got a resounding response. So they've managed to raise little over 5,000 crore in a matter of hours. What does that indicate? Euphoria or demand for private banking paper?
I think it essentially demonstrates, I think, the great quality of management that Axis has demonstrated under Ms. Shikha Sharma. I think also the issue has sort of been relatively attractively priced. I think 2 or 3 issues stand out in case of private sector banks in general and Axis and ICICI in particular. That is the robust asset quality in an environment in which there has been mixed asset quality trends in case of many public sector banks. And the second is the fact that their margins sort of have remained firm. So I think these 2 issues make us very positive on both ICICI Bank and Axis Bank in the medium term.